I'm pleased to advise you about our results for the last financial year, the year ending March 2019. It's a good, solid set of results. It's a good performance against the backdrop of Brexit uncertainty, challenging high street, and the sun shining so brightly last year, which it hadn't done for 40 years, and that having an impact upon our foreign currency activity. Overall, profit is up £200,000. Pre-tax profit is 6.5 million. Underlying profit is up to 6.7 million. Good cash generation, very solid balance sheet. We're reporting a good, solid set of results that the board are happy with, and also look forward with optimism that we can improve on those as we move forward. So what should also be noticed from our accounts this year is an accounting change to IFRS 9 and IFRS 15. So anybody who wants to work through their metrics and ratios, what we'd always say is concentrate on the gross profit line, but our revenue was up 17%. Underlying revenue on a like-for-like basis for the accounting treatment, it's actually up 10%. And that's due to the way that we had to recognise pawnbroking interest and our credit losses, which comes through sales and cost of sales, and gross profit is completely unaffected. Having explained the accounting changes that affect pawnbroking, going into the pawnbroking segment, you'll see that the revenue is up 51%. That's the accounting changes. The actual underlying interest is up 8% for pawnbroking, which is a good performance. It's investing in the conversations, customer relationships, and also lending more where against retail items, and we can sell that through our stores. And that's the investments, that's the strategy, just a good solid performance. Biggest part of the business, foreign currency. So we've said it was affected by the heat wave last year. It's up overall 2%, with the gross currency exchanged £496 million. Customer numbers are up 4%, against a backdrop of turnover up 2% and commission up 2%. And that really is to do with people going away less often. So it's a good solid performance again from our foreign currency segment of the business. Into retail. Retail has been really one of our success stories. We've invested heavily in stock, we've invested heavily in training, we've invested heavily in how the stock is presented to the customer, the segmentation of new jewellery from second-hand jewellery. And the results of that is that the revenue is up 23% and gross profit up 22%. So we've maintained margin at 52%. And it's a good, against that high street retail background, that's a good performance. And we still have opportunities to improve with stock management and executing a little bit better than we have. The last core segment is the purchase of precious metals, gold buying for a better phrase. So this is gold that we buy off the customer and that we melt it for its intrinsic value. The profit is up 10%, and that profit increase is coming from our new stores. The weight purchased by the core estate is the same this year as it was last year, and the gold price was relatively flat across the 2 years. So that's the purchase of precious metals. The growth strategy of the business hasn't changed. So last year, go back 12 months, what we were trying to do, trying to improve the performance of our core segments, and obviously we've just run through those numbers, generally very positive. The other thing within our core estate, what we can do is we can look at relocations. We relocated 5 stores during the year, and all those locations have all gone very well for us. So quite happy with the relocations. There are more to do, and what we're looking at here is where we might be in a suburban location that we're not generating the foreign currency income or the retail income that we can, and there's an opportunity for us to relocate and then develop those income streams in those towns. So we have relocations, done 5, still on our agenda to do that as we look forward. In terms of the new store estate, we opened 9 stores in the last financial year. 6 of them were greenfield sites. 2 of them were jewellers that we converted into a Ramsdens, so it's full service. 1 of them was a small pawnbroker's suburban location on the edge of the town, which will be relocated in the next 12 months. So that's those 9 stores. And then just before the year end, we bought 5 loan books and 18 stores from the Money Shop. The last part of the growth strategy is online. So the online, so improving our retail website, our retail jewellery website. Retail jewellery online is now 5% of our total jewellery sales. and it's up 77% year on year. So a good solid performance. It's growing and providing us with opportunity. Our foreign currency website is up 48% with click and collect, and click and collect for foreign currency is now 6% of our total foreign currency exchanged. So a good solid performance with our online, but both represent still an opportunity to move forward. So following the Money Shop transaction, where we've got the 5 loan books and the 18 stores, what we're going to do in this financial year coming forward is we want to concentrate on the acquired stores and how we make them more of a Ramsdens store, so a full offering for jewellery retailing, improved pawnbroking, improved purchase of precious metals, and then build on the foreign currency transactions that the store already does. So there's an investment in our brand, our systems, our training, and that will take place, or is taking place already, and will continue to take place over this financial year. So what we have said about this acquisition is this year it will generate £300,000 worth of additional profit on its own, and then next year it would increase profits up to £600,000. Now, why is the difference? Well, in this year we've got some transitional costs, we've got the rebranding, we have a period where the store will close so that we can do the refurbishment, and then obviously we're only going to have part of the year with the jewellery income. So that's this year at £300,000 additional profit, and then next year it grows again to £600,000 profit. On top of that original Money Shop deal that we did just before the year end, we've done another set of stores, which is 12 loan books and 4 stores following the year end, and that follows the same pattern. Within these stores, we're not expecting much additional profit in this financial year, but post refurbishment, so post closure, post refurbishment, full jewellery income, we think that'll add another £300,000 into next year. So we have that profit that we're expecting to come through as we execute our plan to improve these stores. In terms of the new stores and the investments that we've made over the recent years, the 13 relatively new stores that we have in our estate, they are also going through that process of initially loss-making, breaking even, moving through to profitability. So this year, concentration on the refurbishment of the ex-Money Shop stores and making them fully Ramsdens, and opening 6 new stores, and then going to open 12 new stores next year is the plan at the moment. 6 new stores, we've already opened 3 in the first month of the financial year, and we have 3 in legals. And where we've researched a town and we have a good opportunity to get a unit that we want, 6 is a number, so it could be 7, 8, 9, depending on the opportunities that are presented, but we'll make the right decisions for the long term. That's the plan about expanding the new store estate. And there are plenty of opportunities for us to open in towns. We've been very successful in towns with 15, 20,000 people, so we see there's a lot of opportunity for towns to fill in. One of the things that we want to do is obviously, with our increasing profit, is reward our shareholders. So we have a progressive dividend policy where we can increase the financial amount that we pay out as a dividend, and subject to the AGM, we've proposed that our final dividend is increased to 4.8p, up from 4.4p last year, and that will make the total dividend for the year 7.2p. Subject to approval at the AGM, that dividend will be paid on the 20th of September later this year. Our intention is still to grow that dividend. It's still to be progressive, paid out in a 1/3 and 2/3 ratio, interim and final, and we see that being able to reward our shareholders as we go forward. In summary, I think we've had a good year given the backdrop. We look forward with plenty of opportunity to improve what we're doing in our existing stores, to improve what we're doing in finding new stores and how they're performing. The board at Ramsdens are very happy to engage with our shareholders. If you've got a question, either email us at ir@ramsdensplc.com or come along to the AGM, 17th of July at the Riverside Stadium in Middlesbrough.